Do these 5 things immediately after getting approved for a personal loan so your repayments are on time and stress-free. First, make sure that you receive the money and it's in your bank account. This might seem silly, but mistakes happen, like with Citibank, who accidentally credited $81 trillion into an account instead of 280. But if the money isn't in your bank, you should contact your loan provider immediately to get it fixed. And if you do see the money in your account, verify it's the exact amount that you were approved for, no more or less. After you've confirmed that the right amount of money is in your account, you need to store your loan documents somewhere safe and secure. Don't skip this, because what if the IRS decides to audit you, or there's confusion about your repayment schedule, or you're charged an unexpected fee? So file them properly. That could mean putting them in a Google Drive, saving it in a folder on your computer, emailing it to yourself, or maybe just doing it the old-fashioned way, printing it out and putting it in a drawer. The next step is creating a repayment plan that works for you. This is very important because if you need a loan in the future, lenders need to know you will pay them back and pay on time. But how do you build a repayment plan? Well, you start by creating a monthly budget. To do this, add up your income, then subtract your regular expenses like rent, utilities, groceries, transportation, and other essential bills. This will help you understand how much money you have available each month to put towards debt repayment. Once you figured that out, make a list of every loan, credit card, or debt that you currently have and identify the minimum monthly payment required for each one. Your number one priority is making sure you never miss a minimum payment, since missed payments can severely harm your credit score. Once you understand how much money and debt you're dealing with, you'll need to pick a debt strategy. Most people either use the debt avalanche method, which prioritizes paying off debts with the highest interest rates first, or the debt snowball method, which pays off the smallest balance first to build the momentum. And remember, whichever method you choose, it's in your best interest to put any extra money from your debt towards your loan. This can help you pay off your loans months or years ahead of schedule and save you tons on interest. And if you're someone who doesn't have extra money and are struggling to make your monthly payments, try reaching out to your lender to discuss your options. So far, we've confirmed the money's in your bank, stored your loan agreement safely, and made your repayment plan. Next, go check out your credit score because it's likely changed after you got your loan. It's important to keep track of your credit score so you know what information lenders are seeing when you apply for loans or credit. Nowadays, even landlords are checking credit scores while reviewing their applications. This means a poor credit score can impact more than just loans and credit options. But as a heads up, your new loan likely won't show up on your credit report for a month or two. And when it finally does, you'll likely see a decrease in your credit score. This decrease can be caused by a number of things. The first is obvious. You've increased your total debt, which increases your debt to income ratio, something that credit bureaus do not like. Another reason you may see a small dip in your credit score would be a hard credit check. This is the process of a lender or creditor checking your score during the application process. But it's not as scary as it sounds, and the impact is usually minimal, often around 5 points or fewer. Some loan providers, like CreditNinja, also use what's called an instant bank verification, aka IBV, which is another way to see if somebody can repay a loan even if they don't have the best credit score, which we talk more about in this video. Another reason you might see a drop in your score would be due to the overall age of your credit accounts. You see, credit companies like it when your credit accounts are older because it shows consistency and financial stability. But when you get a new loan, it adds a brand new account to your credit history, which lowers the overall age of your accounts. The actual drop will probably be around 5 to 10 points. But like the hard credit check, it should be temporary. And if you pay on time, this will usually go back up in a few months. You can check your credit report for free on annualcreditreport.com or usually through your bank account. Your bank might offer your credit score with some minor details on what you can improve, but Annual Credit Report will give you a detailed report that has all the info you need. Carrying credit card debt is also one of the biggest factors when it comes to credit scores. So if that's something you're struggling with, check out this video on the best ways to pay it off fast. The last thing you need to do is set up automatic payments. I cannot emphasize how much stress and hassle this has saved me. And I get it, life is busy and it's easy to overlook payments and deadlines. But missing even a single loan payment isn't just some minor issue. It can seriously affect your financial health. A missed payment can remain on your credit report for up to 7 years, potentially lowering your credit score by as much as 100 points, depending on your overall credit history and how much debt you carry. And consistent late payments or failure to repay can lead you into loan default, resulting in your debt being sent to collections. But the good news is that it's very easy to avoid. By automating your monthly loan payments from your bank, you can eliminate the risk of missed payments, late fees, and damage to your credit score. And setting it up is easy, at least with CreditNinja. The customer portal is super easy to navigate. All you do is log in and go to the Add Card tab. Then select the blue Add Debit Card button. Then you'll be prompted to enter your card details. It's that simple. So remember, when you get your loan, confirm you got your money, save your loan information somewhere secure, build your repayment plan, monitor your credit score, and set up automatic payments. Thanks for watching. Don't forget to subscribe, and we'll see you for the next one.